At one level at a time, we are a different channel because we bring in experts from across the real estate and mortgage markets. We have the boys from Convoy Home Loans, Dustin, and soon to be Jonathan. How you doing, Dustin?
Good. How are you?
All right, man. So I think we need to talk about the market, lending restrictions, commercial banks. Obviously, this week we got a light reading on CPI. We got a light reading on PPI. We had jobless claims this week come in hotter than expected. All in all, I think the Fed is at their terminal rate, which I think is going to mean that mortgage rates slowly march towards 6% and ultimately below 6% in the coming months. What do you think of all that? What do you think about rates and inflation? What do you got going on?
Yeah, I think what was it 4.9, right? Beat expectations, which was nice, but by point 0.1, so nothing crazy. But I do think this gives the market some hope as to their predictions of next meeting being a pause, and then I think in July it's like at 50% right now that they're betting it's going to be a cut, right? And ultimately, mortgage rates are going to follow if you just follow the Fed futures, right? If that percentage in July turns to 60%, for a cut or 70%, we'll see rates slowly come down. If we see it turn to 30, we'll see slowly rates go up. But I think we're at a good point in the market. Keep in mind, with a grain of salt, for the average rate and where the rates are at, just to see some normal, rates that people can expect to see, that this is normal now.
Yeah.
Like that's the bottom line, is the more that we can play on kind of and here's Jonathan,
Yep.
um, even playing field, if you will, where it's not just a ping pong game of rates. It's going to make everybody's job, not just first time home buyers, but mortgage brokers and
Yeah.
investors, job a lot easier.
Yeah. What I've often thought, guys, is we had to get to the terminal rate, which I think we're at now. We had to see the economy slowing down. We had to see inflation coming down, which it is. And then we can see the gap, which I think was 313 basis points, the spread between the 10-year and mortgage rates. That's not normal, right? Historically speaking, it's 1.7 to 1.8. Net today it's 3, right? 3.1. When do we think that might start coming in? Do you think that kind of slowly collapses over the next couple of months, or am I crazy?
I think it has to.
Yeah.
Like I said, there's no way rates can stay this elevated, right? And I mean, we say elevated from a perspective of the current market, but overall wise, I mean, when they talk about, oh, rates used to be, 12, 13, 15%, prices were also very cheap
Yeah,
back then, right?
exactly.
But even then, rates came back down, right? There was a time where those rates were up there, and then it came down to where we are right now and where we were last year. So I think we ride it out a little bit in the range that we're at, but I think eventually it has to climb down and the spread has to get smaller.